Feeling lost? Let reallandlording.com navigate your rental business.
All right, let's talk about rent in Philadelphia. If you've been paying attention, you know it's a city of, well, contradictions. You hear stories about it being this super affordable place, and then you hear about crazy competition for apartments. So what's really going on as we head into 2025? Let's dig in. And this really is the question, isn't it? Is Philly still that affordable city we all think of? For so long, it's been the go-to spot in the Northeast, right? The place you could actually afford to live without the insane price tags of its neighbors. But is that reputation still holding up? You know, when you first look at the numbers, the answer seems like a resounding yes. I mean, just look at this. A two-bedroom in Philly, around $1,700. Now, look at DC. We're talking over $3,400. And Boston? Get this, $4,200. That is a massive, massive difference. It's no wonder they call Philly an affordability magnet. It's literally pulling people in. So here's how we're going to break it all down. First, we'll look at the big market numbers. Then we'll zoom into a tale of two very different neighborhoods. After that, we'll get to know who the Philly renter actually is. Then we'll look at the major forces shaping the city's future. And finally, what's on the horizon. Okay, so first up, let's dive into the big market numbers. And I'm calling this a picture of contradictions for a reason. Because as soon as you look past that simple comparison, the whole Philly is affordable story, well, it gets complicated. Fast. So Zillow comes out with this number, $1,650. That's the average rent they're seeing. And you look at that and you think, okay, that seems pretty manageable for a big city. It kind of paints a picture of a pretty accessible market. But then, hold on. Redfin puts out their number just a month earlier, and it's over $2,000. That's more than a $400 difference. So what's the deal? How can they both be right? And here's the secret. There's no such thing as the Philadelphia rental market. Not really. It's more like a collection of a dozen tiny, separate markets all mashed together. Of course, the average rent for a brand new luxury apartment downtown is going to be totally different from a classic row home in South Philly. These two numbers, side by side, they tell you one thing for sure. To get Philly, you have to zoom in. And this chart right here shows one of the biggest reasons why things are so chaotic: supply. Look at 2024. The city got hit with a tidal wave of new apartments, almost 13,000 of them. But check out the projection for 2025. It plummets to less than half of that. This wild swing, this boom and bust in construction, it has a massive impact on what you pay, but it doesn't hit every neighborhood the same way. Which brings us to our next section, a tale of two neighborhoods. Let's see how those huge citywide numbers are actually playing out, street by street. And this is where it gets really fascinating. Let's take two completely different parts of the city. You've got your super trendy areas, right? Fishtown, Northern Liberties. They built so much so fast that suddenly there were tons of empty apartments. We're talking vacancy rates hitting 20%. Landlords are practically giving away a month of free rent just to get people in the door. But then you go over to Northeast Philly. It's a whole different story. Super stable, more family-focused, way lower rents, and almost no new construction. It's like they're two different cities. So let's shift gears a bit, because behind all these numbers and buildings, there are actual people. So who is the Philly renter? Let's get to the human side of all this. The data gives us a pretty good sketch. The median age is about 35. And there's this huge wave of young professionals, 22 to 34, pouring into the city. A lot of them are coming for the amazing universities and hospitals, the meds and eds economy. But here is a number that really matters. Almost half, nearly half, of all renters are what's called cost burdened. And what that means is they're spending over 30% of their income just on rent. Just look at that. 49%. Let that sink in for a second. That's basically 1 out of every 2 people renting in Philadelphia who are financially stretched thin by their housing costs. So while Philly might look affordable from the outside compared to Boston, for almost half the people who actually live there, it sure doesn't feel that way. And let's just put that in perspective. To not be cost burdened, to afford that median rent without breaking the bank, you need to be making close to $75,000 a year. That's a lot more than what many, many households in the city actually bring in. It's the reality check. The math, it just doesn't add up for a huge chunk of the city. Okay, so this whole affordability crunch is happening inside this giant tug of war for the city's future. There are these huge forces pulling Philadelphia in opposite directions, and it's affecting everything. So on the one hand, you have these incredible strengths. That meds and eds economy is a powerhouse, right? It creates stable jobs, it brings in all those young, talented renters. But on the other side, pulling against that success, you have some serious threats. A huge portion of the city's housing is old and really expensive to keep up. And then there's the looming funding crisis for SEPTA, the public transit system that is basically the city's circulatory system. So with all of that in the mix, the construction slowdown, the cost-burdened renters, this tug of war, what does it all mean for the near future? Let's wrap up with a look at what the experts are predicting for 2025. Well, the forecast is actually for things to cool down a bit. With that big drop in new construction we saw, rent increases are expected to be pretty moderate, around 3%. And citywide, the number of occupied apartments should stay healthy and stable, somewhere in that 93 to 94% range. It really suggests the market is kind of finding its balance after that crazy construction boom. Which leads us right here to the final critical question. This slowdown in building, maybe it's a good thing, a chance for the city to just breathe for a second and find some balance. But all those underlying pressures we talked about, they're still there. So here's what it all comes down to. Is Philly going to figure this out? Can it grow and stay affordable? Or is that famous affordability magnet about to lose its power?